Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and I'm just going to go ahead and review the stock, commodity, bond, and forex market. Without any further delay, let's go ahead and review these key markets. Alright, for starters, let's go ahead and review the dollar index. Dollar index does continue lower on the Thursday day trading session. Yesterday I did imply that the dollar index would continue going lower after a break right, right below this T trend line. And that's pretty much, oh no, not Tuesday, but Wednesday was when it really happened. We broke below this trend line and we did continue going lower, and pretty much that was pretty negative in my own book. And because of that, I did anticipate a positive trading day for commodities and stocks alike. We continue to see this on Tuesday night trading, and as we can see throughout Wednesday's session, it did continue going lower, and it did go lower substantially on the 10:30 U.S. stock market open. So pretty much negative. Now, we are continuing this downwards momentum, and that should make stocks go up substantially. I don't know if this is through Federal Reserve manipulation or any of that type, but the whole thesis here is that stocks will go drastically higher on these measures. Now, let's go ahead and look at the Dow Jones Industrial Average. We do have a double topping pattern in place, but judging by what I'm seeing with the dollar index, I don't think it really matters. I think the dollar index has said enough. I think that the U.S. stock market will fall substantially, not fall substantially, but rise substantially. So, I see the Dow Jones Industrial breaking this double topping pattern and going into the 10,400 area on tomorrow's day's trading. Now let's go ahead and review the next chart. Which is going to be the Euro US dollar. Euro US dollar is going a little higher, as you guys can go ahead and see on the 5-day chart. The euro is ripping higher, mainly because of a lot of different factors, but mainly being that the U.S. and their permanent open market operations, along with the fact that we still haven't pulled out of Iraq. And you know, we have broken some key technical areas. If you guys go ahead and zoom back, I did mention that the Euro US dollar would go higher. We do have a positive indication on the short-term trend on the Euro US dollar. We could have a double top in place soon, but you know, these issues with the debt, it's not going to be too severe. I think people are going to come to a resolution and realize that once the European Union is able to get their deficit in control, that would just make the U.S. look that much more bad, and that would make the euro that much more safer. Likewise, the U.S. dollar will weaken that much more in proportion to the euro. Alright, so let's go ahead and look at the next chart, which is going to be the US dollar Japanese yen. US dollar Japanese yen is back to back against a double topping pattern along with the 200-day moving average. Now, the 200-day moving average is definitely an area of resistance, but it will be broken as central banks are involved in making the Japanese yen lose some of its value. And also, if you guys look at this, you have a double topping pattern right there. And what I mean by losing value is that if the US dollar does go up in proportion to the Japanese yen, that makes the Japanese yen lose value. This is what the Japanese economy has been needing for a long time, inflation. And you would need a moderate amount of inflation with a larger amount of growth to be considered a healthy economy. Japan is not getting any growth, and their deflation is and the economy itself is contracting and deflating, so that's very bad. One way they want to solve this is by making their exports cheaper, and also by making money more readily available and making interest rates lower. So that's pretty much what the Japanese government is doing in response to this recent crisis with the earthquake and the tsunami. Next, I want to go ahead and review the crude oil market. Crude oil market is most likely going to go lower. I don't really like what I'm seeing. We got a downtrending triangle on this. And not only that, if you guys look at today's trading session, it is going a little higher, as you guys can see, but you know, I'm not too convinced. I think that crude oil is, you know, does have some key areas of resistance over here. And pretty much, you know, me personally, when it comes to crude oil, I think it will go up when the US dollar does fall down in value, as we have seen right now. It has fallen down in value by a huge amount, and likewise the crude oil market is responding very, very positively, and I'm most likely going to see more of that in the short term. But over the longer term, I'm not too happy with crude oil. We have a lot of crude oil inventory, and we are producing more than enough crude oil per day to meet demand. At least 3 to 6 million barrels per day is being produced extra on top of what we actually need. So basically, the thesis and the end point here is that people are buying into the hype, and eventually they're going to sell the news. Moving on, I want to go ahead and review the Treasury bond market. Treasury bond market should and will most likely go lower as the dollar index does fall. The Treasury bond market does correlate directly with the dollar index, and the dollar index falls. The Treasury bond market tends to fall as well. Mainly, the main reason behind it is because of the fact that when Treasury bonds fall, when the dollar index falls, that basically implies inflation. When you have inflation, what do you have to do? Well, basically, bond investors want more interest every time the economy inflates. It only makes sense. I mean, if you want to keep up with inflation, you'd either sell your bonds and buy stock, and that in turn will make Treasury bonds fall in value, and their interest will go up. And that's pretty much what you're going to see in the coming weeks, at least in the coming days and weeks ahead, a continued downtrend in the bond market. Now, moving on, I want to go ahead and review the next chart, which is going to be the volatility index. As you guys can see, the volatility index does move in an inverse pattern with the dollar index. As you guys have seen, the dollar index has continued going lower. I'm just going to go ahead and show you what happens to the volatility index as well. It has just continued going lower. The volatility index and the dollar index does work in tandem. Another thing that I do want to point out is that the volatility index does trade around 2 to 3 times faster than the Dow Jones Industrial Average. So let's say the Dow Jones Industrial Average goes up by around 3%. The volatility index would go down anywhere from, give or take, 10 to 20, sometimes even 30%. So maybe a factor of 3 to 10. When the Dow Jones Industrial Average rallied by 5%, the stock had just fallen by around 30 to 40%. Well, not really 40%, but around 30% in a very short period of time, 20 to 30%. As you guys can see, it was trading at around, give or take, if you guys could see, yeah, oh, whoa, it's weird. But just go ahead and show you guys the 15-minute. And you guys can see it was trading all the way up at around $39, and that was the peak of the fear. Now it's at $29. It's pretty much a 30% decline, and that's pretty much the main reason why, if you guys want to trade these markets and you guys are trading options, the easiest way to make money off these type of markets where the dollar index continues going lower and the stock market keeps going higher is that you guys buy SPY call options, basically S&P 500 index ETF call options, or you buy the volatility index put options. Anyway, that does it for me for today. If you guys have any questions, please be sure to leave a comment below. I'll have more for you guys in the coming weeks and months ahead. And also, if you guys want to have more of this type of content coming to you, you should subscribe to my YouTube channel, as I will have more for you guys on a regular basis. Anyway, thanks a bunch, and take care.